Hey, my name's James Nicholson. I've got some positive news for once. The Bank of England have just had their monetary policy meeting. They've indicated that rates could be cut next month, but more importantly, they've also said that rates could be cut way more than the markets are predicting. This is a very, very interesting meeting that they've had. I've watched all of the press conference, read all of the news articles, and I've collated everything that you need to know. This is going to impact your mortgage interest rate. It's going to impact so much in your life. It is a very, very positive meeting. So before we jump into this, as always, if you haven't done, subscribe to the channel over there and hit the bell notification. I've got new content every single day on this channel. We're on the way to 23,000 subscribers. Help me get there a little bit quicker. And while you're here, smash the like button, tickle the like button. Today is the day that you really need to smash the like button because the Bank of England has pivoted. They're actually really positive for once, and that's what we want to talk about. So take a moment to smash that like button over there. So why am I so upbeat on today's meeting? Because look, at the end of the day, interest rates have just been held. We didn't have a cut. We fortunately didn't have an increase, but yeah, interest rates have been held yet again at 5.25%, and that is the sixth time. So that's not great. They're in restrictive territory. That's the Bank of England's language on that, meaning that people are feeling pain. It means that it's going to stop you spending so much money, and that's not good. But there is a change here. And so last month's meeting, or the last meeting, whenever that was, I've forgotten now, about 6 weeks ago, in the last meeting, what they said was that 8 people voted in order to keep interest rates the same and 1 voted to drop. Now we've had a change. Things are moving in the right direction. So the vote today was 7-2. 7 people voted to keep interest rates where they are, and 2 people voted to move them down. Now, what was interesting is the new person that joined in was someone called Dave Ramsden. He's one of the most senior people on the Monetary Policy Committee, and that's good because he has a little bit more influence over the more junior members, and we're moving in the right direction, guys. We've got more people saying, look, we need to start moving rates down. That is really, really positive. Now, the markets were all, pricing in an August cut. That's probably changing this afternoon, and I'm going to go into why, because there was some very specific language. I watched the whole press conference and I've read all the articles following this. Some very, very interesting language used here. Now, this is what came out of the Bank of England's mouth. They're saying that the cuts, the interest rate cuts, will be more than the market is pricing in. Now that is good. And at the time, prior to this meeting, the market was cutting in 2 interest rate cuts of 0.25% between now and December, this year, right? This calendar year. They're saying we're actually potentially going to do more than that, which is good. They're also saying that they have not ruled out, they're bringing this up. This is way before they're even getting questioned by the journalists. They're saying that we are not ruling out a cut in June. That means, look, they're really considering that now. And between now and June, there are 2 more sets of inflation data. 2 more sets. Now, the next one next week is expected to be a big drop, close to that 2% target, which is really, really good. Now, the inflation is expected to drop for the summer. We've talked about this. They've talked about this. So inflation is expected to be very close to that 2% target, maybe even a smidge below for the summer, and then potentially at the end of the year to start going up to around 2.6% again. So not huge spikes in inflation, but it isn't beaten by any means. What else are they saying here? I've got quite a few notes here. So yeah, inflation is looking to drop temporarily and then go up. But the main thing that they're really saying here is that they're not so concerned about wages anymore. That was a real concern in some of the previous meetings about, are wages going to get out of control? They're actually happy. Wages are around 4% up at the moment for the year. 4% is pretty good. Inflation is lower than that. So people are catching their breath here. They're getting a little bit more better off as time goes on. The situation is getting better. Remember, energy's dropping, inflation's dropping, and wages on average are going up by around 4%. And the Bank of England's happy with that now. Before, they weren't, right? They were a little concerned about that. They were really keeping an eye on wages. And we want people to get slightly better off. And if it happens gradually, that is a better way. Unfortunately, if it rushes and pay rises go through the roof, then the Bank of England might intervene. So if it just goes up gradually and people catch their breath as inflation goes down, that's a positive thing here. But they're saying in their questions and answers, journalists were saying, look, you've got data, your data's saying inflation is going to get close to target this summer while rising. Then 2025 will be around 2.4% and 2026 will be less than 2%. And so the journalists are saying, your data's saying that. So if your data is correct, could we have a rate cut next month in June? And that isn't being ruled out. And that is a real change in the language from the Bank of England. They always try to avoid that direct question, when are you cutting rates? They don't like to answer that. Not like the Americans. The Federal Reserve went out on a limb a few months ago and said we're going to have around 6 rate cuts this year. That didn't actually happen. Inflation was more stubborn in America, so they look a little bit silly on that side. And the Bank of England don't like to do that. They like to be really cautious and not try and get too optimistic or try and move markets or give false hope out there. But they really are saying, if you go and watch the YouTube video of the Bank of England meetings, about 2 hours long, they're saying, look, potentially, yeah, June is the time. But the more important thing that I just want to really get across to people, and we're going to start seeing this in the markets, and we'll have some updates for sure this week on how this impacts mortgage rates, is they're saying that the markets have not got the right amount of rate cuts in on their analysis. That means that potentially there are going to be more rate cuts or bigger, deeper rate cuts than people were expecting. I think this is the most positive Bank of England meeting that we've had in at least a year. And that is really, really good. So they are saying that inflation is still around. There is a risk of it coming back, but things are way more predictable now. We have wars, and that needs to be addressed, but they're not escalating massively at the moment. We have an energy crisis that we need to keep on top of and keep an eye on that, but the energy costs are a bit more predictable at the moment, and we know costs are going to come down. And there is lots of relatively good stuff in there. And so I think this is a good meeting. My question for you is, do you now think, off the back of this meeting, that they'll cut in June? Do comment below with your opinion. Do you think they're going to cut the base rate in June? And maybe comment below with how much do you think they're going to cut. They're saying the market is not got the expectations of how much they're going to cut. So maybe they're thinking of some bigger cuts to start with. Maybe they're considering a 0.5 percentage basis point cut. What they also were asked, and they did answer this one, is they said, look, let's just say rates got cut to 4.5%. 0.75 off from where we are. Let's just say that happened. Are rates still restrictive in that scenario? And the answer was yes. And that's good, because that means that we can get to that 4.5% base rate, and they can still feel that they're doing their job against inflation. They don't need it at this 5.25. And I think these rate cuts are going to come a little bit sooner. Fingers crossed for June. Let me know your thoughts in the comments, but it is a good meeting. It's way more positive. And what we want to watch out for this week is, what do the swap rates do based on this information? They had the uncertainty of inflation. It wasn't going down fast enough in the UK. Now this new data's out. Now it's a lot more optimistic from the Bank of England. Do swap rates drop? That means your mortgage rate drops. That's why you need to subscribe and keep up to date on what's happening. Anyway, do comment below with your thoughts and opinions. Do smash the like button. Share this video with someone that maybe is remortgaging in the next few months. It's a good day. I'm happy with this. Anyway, do check out more content on my channel, including this video right here.